happen, right? They don't wake up, their family is protected. Those are actual copies of checks. It doesn't matter if it was 75,000, 50,000, 25, but you see, it doesn't matter. 250, 195, 1 million. You know what's the most important size of the check? When something happens, that we show up with a check. And you see, we talk about, outwitting the devil. The devil is very powerful. The devil convinces family to hurt family sometimes. Okay? And it's so sad. Thank God Murley is good at what he does. That's another thing. You got to be good at what you do, and you got to believe in what you do and give up. Just think if you said, okay, it's your aunt. I don't want to hurt your aunt's feelings. Devil shows up in different forms. Related or unrelated. Okay, good. Our next speaker. Folks, they call her the Mother Teresa of Primerica, Canada. I know for sure she's the Mother Teresa of Primerica. Okay? Folks, she's one of the hardest working person I know. She's the EVP of Primerica Life. She's a home office executive. But folks, she doesn't like you. She doesn't see it as a job. She has made a commitment, and she doesn't have to say it. She displays it in her actions to make a difference in the lives of the people of Primerica. Folks, she works tirelessly. She puts her heart and soul. She takes her success seriously, whatever it is that she can do. And I think sometimes when we talk about the relationship between our home office and the field is incredible. But I think anytime we talk about that, the person at the front that understands the field, that fights for the field, at work, everybody at home office does that. But I'm telling you, there's nobody's got a better understanding and a dedication to helping you win and make a difference. Okay, she's a great friend of Legacy Builders. She's a great supporter of Legacy Builders. Again, I know we all love her very much. So let's give it up for the incredible Rosie Orlando.
You guys are amazing. There's always two things about Legacy Builders events. I always feel very, very welcome and appreciated, and I never leave hungry. So, I was actually looking for the food stands in the corners. I didn't see them today. I also learned that Legacy Builders are very creative parkers. Anyway. So I know normally you're accustomed to me coming and talking to you a little bit about the industry and the company and so on, and I wanted to try to do something a little bit different today. So I will assure you that the company is still very strong financially. We continue to be well capitalized, well above the regulatory minimums. Our portfolio is still very conservative. We continue to deliver on the promises we make to our clients. We're continuing to break records. We've got record insurance in force on over 500,000 lives insured, 110 million paid claims last year again. So we continue to do amazing work for Canadian families, and that's in tribute to all of you. So thank you for all of you. But as I started working on my presentation for today, I started thinking about ways that were unique and things that I'm most proud of. And I hope you can see that. I might have to read some of that to you. But I started thinking about our unique focus on the middle market. So I started doing some research on the middle market and what the middle market needed and so on. And the first thing I came across was this article. And the headline you can see there is, "Today's middle market has leveraged its dreams." And if there's ever been a statement that is more suited to something that Primerica can address, it's this one, right? Because in every aspect, we have a way of having impact Canadian families and reversing that. It goes on to say that the only constant about the middle class is that the growing norm is that the middle class in Canada is loaded up with debt to maintain its consumer aspirations. Back in the 1960s and 70s, it only took a middle-class single-income household between 15 and 20 years to pay off their home. In the 80s and 90s, it became harder, and it took 2 incomes and 25 to 30 years to pay off the mortgage. In the past few years, and including today, it takes an average of 2.5 incomes, and the mortgage is likely never to be paid off. Right? So as I read that to you, I hope that you start thinking about things that Primerica can do to address that. And number one, top of mind, should obviously be the opportunity. So then I looked at other things, and I thought about government. I thought surely government has plans for the middle class. So I looked at the Department of Finance website, and I found a paper that they issued entitled Real Progress for Canada's Middle Class. So the government plan was to invest in people, to strengthen and grow the economy and so on. And I thought, okay, well, that's good. I'm going to go ahead and keep reading and see what they have to say. So under their more money to save, invest, and grow the economy, which is something that, is promising, I think, for the middle class, their solution, by this time next year, a typical middle class family of 4 will receive an average of about $2,000 more each year as a result of the middle income tax cuts. Because of these changes, more families will be able to pay for things like healthy food, back to school clothes, and new winter boots for growing kids, right? Should those be things that are negotiable? I mean, that's the government's plan for addressing middle income Canadians' needs. And then, thanks to the child benefit plan, a single working mother or father who has 2 children and who earns $30,000 a year, so right away you're thinking, single mom, $30,000, 2 kids, right? They're going to be getting about $3,000 more a year, right? So that's what the government has to say about the help that they're offering to the middle class. And then we have the banks. So the banks have done a great job helping the middle class, as we can see, through offering mortgages. You can see Canadians can't stop using their homes as piggy banks. How many of you have heard of HELOCs? Right? It is horrible. It is horrible. I see my friends do it. No matter how much you advise them, it's this open money. As soon as you make a mortgage payment, that balance on your credit line goes up, except for the interest, of course, because the interest continues to be paid. You've got that little bit, and Canadians are spending it. And it's terrible. It really is. The second headline there is how Canadian homes became debt traps. And you can see that's a house with sharks circling, right? I didn't notice that at first, but that's exactly what it is, right? Canadians are in trouble. And then we've got the industry. What is the industry doing to help the consumer? Universal Life, a 1980s sensation, has backfired, right? We all know that. We all know that the product isn't as it was designed, that interest rates are hurting it, that clients don't have the coverage or the premium that they've been expecting. And then we've got the robo-advisor and the movement to electronic. How many of you have heard about all that, the next best wave? So this company called Viviplan, costs are reasonable. For $500, you can get an online financial report that addresses 2 major financial decisions you're interested in, plus a half-hour phone call where you can discuss the financial plan for advice and ask any questions you may have about its contents. $500 to do something online and talk to somebody for half an hour. For a little more, $800 or so, you can get a complete financial plan. A service that often costs between $1,500 and $4,500 when you meet with an advisor. And what's even better, it's so convenient because you can do it from the comfort of your own living room. Well, we do it from the comfort of the kitchen table, right? And we do it at no cost at all, and it's called a financial needs analysis, and it's called all of you, right? And what you bring to the consumer. And then there's the insurance gap, a growing opportunity, and Canadians really are in need. The total household debt in Canada totaled nearly $2.2 trillion. There isn't even enough life insurance in force to cover that debt in Canada, let alone to cover future needs and income protection. $1.44 trillion is mortgage debt, $769 is credit card and other loans. Excluding mortgages, the average debt per person is $22,800. Okay, that's even higher in the 46 to 55 age group. It's $34,100. That's also the fastest growing group. Canadians owe $1.79 for every dollar of household disposable income. I ask you, how will Canadians ever get out of that trap? How? You heard on the other page, they need 2.5 times income that they needed before. If there's 2 people working, that means somebody's working, or both of them are working a part-time job, right? I think debt is a huge crisis facing Canadians, and the fact that they're not properly protected only compounds that. I think we need to be putting insurance in place with that in mind. I think we need to be taking income protection, life insurance, all of that into account. Only 16% of Canadians have purchased life insurance to cover their mortgage. Their full mortgage, someone passed away, 7 in 10, 70% of Canadians have some form of life insurance. 3 in 10 do not. So you may think 70% have some form, that's not bad. That's still millions of people, 30% of Canadians that are completely unprotected. And I'm going to share some claim stories with you in a little bit, and you'll see the impact of that. Of those, 48% say they bought individual life insurance, 25% are relying on group alone. And 27% said they have coverage both at work and on their own. And then 45% of households believe even though they have coverage, it's not enough coverage. And as we talked about the robo-advisors, here's a stat that you might be interested in. The simpler products that are sold by direct mail or online are still only about 1% of the total insurance in force. So Primerica, as always, has the solution. We've got a unique focus on the middle market. We've got an educational approach to financial services. I really believe that education is empowerment. With empowerment, you make decisions for your family. You're more confident. And when I say education is empowerment, I don't just mean for the client. I mean for you as well. You need to know your craft. I know that the legacy builders are big on training and knowing their craft. That is critical. Clients are becoming more and more knowledgeable. You need to have your knowledge and skill level match that. We offer simple, affordable term life insurance. That is proven. We started off in 1986 selling only term life insurance, and we're here in 2019 selling only term life insurance. Years ago, in 1986, I could pick up an industry book and look for term life insurance, and I found two companies. One called Seaboard Life that sold a 5-year term, and you don't know who they are because they're not around anymore. And the other one was Canada Life, who sold a 10-year term that expired after 10 years, and that was it. And now as you look around, what's happened? Everyone has term insurance. Why do you suppose that is? Because there's a demand for it, and because it's the right thing to do for the consumer. According to the CLHA, the Canadian Life and Health Insurance Association, individual life insurance has grown faster than group for the past decade, accounting for 61% of the total. That's up from 55% in 2007, and they attribute that to the growth in term life insurance. But 60% of new life insurance policies are term. Still, 40% that's being sold as permanent insurance. And I still see things that upset me. I mean, I had a call just last week from someone in Alberta asking for help because a client who had just lost her husband had been approached by another agent. She didn't have life insurance on her husband, unfortunately, so she was left with 2 children. She was having a hard time dealing with it, so she was on EI, medical benefits. So the insurance agent went in and said to her, you know, you were left unprotected, you can't leave your children unprotected, you know, I'm going to do a complete financial plan for you. And so they put in place 2 critical illness insurance policies on the kids, plus UL policies for their education, and then a UL policy on the insured for $700 a month. She's on EI. She's on EI, and the advisor split it between 2 insurance companies. It was a horrible situation, and of course, anyway, it's being taken care of, but that's the kind of thing that's happening out there. It's still happening out there, and that's what we have to get excited about, and that's what we have to change. You heard from Dave War, we need to do the complete job and invest. You don't want clients coming to the end of term of their policy and not having invested for their future, right? Term insurance was always based on that. It's a temporary need. While you're investing, you know the theory of decreasing responsibility. You don't need me to tell you all over again. Don't leave the house until you've started a PAC or you've picked up some investments. There's a lot of debt out there, and there's mortgages, but there's also money on the table. Clients can find the money. They can give up their Starbucks. They can give up, you know, dinner out 3 times a week. They can find the money for things if they're educated, and I know that you're able to educate them. There is over $600 billion in unused RSP contributions, so they're not maximizing and reducing their taxes. That's another way to find money for them. And then, of course, don't miss the opportunity. It's the greatest thing I think we have to offer above all of our products. Recruiting, never be afraid to talk to someone about this opportunity. It's second to none. We have the systems in place that others don't have. I challenge you to go out there and find someone where you can enter a company and the education costs are covered, the cost of license is covered, the first year E&O is covered, the education and so on. I challenge you to find someone else out there that has that kind of opportunity. And let's not forget the rest of the opportunity, the field training, promoting Sprint to District. Sprint to District should be a way in your business. If you're not familiar with it, please become familiar with it. So I want to talk to you a little bit now about making an impact. Merle did a really good job giving you some personal stories, and I thought I would share some from a home office perspective as well. We see these all the time, and I know I've said it before. I mean, every single one of these clients, I'm sure, would give back that claim check if they could have their loved ones back. But the reality is, life happens, and you can't leave your family unprotected. So these are just some examples where a Primerica representative made a difference. And I want you to pay close attention to the face amounts as I go through these, because I deliberately selected face amounts that were on the higher side, because this representative did the right thing. If you think about the mortgages that are in place right now, what's the average home price in Canada? It's in the 800,000s, right? If you try to get a detached, it's well over $1 million. So right there, clients are keeping their mortgages for longer. You've got debt. I just shared that with you. If you add that to income protection, clients need $1 million coverage, and most clients will need $1 million plus. The first example I have, the policy was issued in November of 2010. The total coverage at time of death was $850,000. It was a $500,000 base plan, but they had the IBR. So those of you that aren't sure about the IBR and so on, this client kept it, had 7 increases. We were able to pay them $850,000 instead of $500,000. The spouse writer passed away from breast cancer at the age of 37, leaving the husband and 2 young daughters. We replaced a $200,000 UL policy with a $500,000 term policy that paid out $850,000. That's the work that all of you do. In another example, I have a policy issued February 1st, 2016. The coverage was $800,000, so $700,000, and only 1 year IBR because it was issued in 2016. They only had time for 1 increase. November 2018, the insured passed away at age of 26 from cardiac arrest. He had no idea he had heart disease. He was born with it. It had gone diagnosed, and he left behind an infant daughter and his wife. But thankfully, he had no coverage before Primerica. Thankfully, someone went into that client's home and gave them the protection that they needed. Another example, policy issued January 1st, 2015, coverage of $750,000. This client was a farmer. They went out to buy a new truck one day, and they were killed in a car accident. We paid a death benefit in the amount of $750,000 to the mother and 2 young kids. Again, absolutely no coverage before Primerica. So you can imagine, he was 30 years old. His wife was the same age, left behind with 2 young kids, and no income protection at all. What would have happened to that family? Policy issued September 2016. The client passed away from breast cancer November 22nd, 2018 at the age of 58. We paid out $1.5 million. I have a few more here, just to give you an idea. $600,000. The primary passed away less than a year later after we issued the policy. So we issued it November 1st, 2017. They passed away May 1st, 2018 at the age of 41. They had no idea. They were diagnosed with lymphoma, and just 6 weeks later they had passed away. We replaced a $250,000 policy with a $600,000 policy. That's a huge difference for that family. Policy issued April 2019, coverage of $1.25. It was $1 million base plus $250,000 IBR. The insured committed suicide. And we don't think about that often, but these days with mental illness, I mean, if you look at this person's file, it was a very, very sad story. And many companies won't pay in the case of suicide. We wrote a check for $1.25 million, paid in trust for his son. He did have coverage before Primerica. He had about less than 10%. He had a $100,000 policy. So I talked to you about those stories because I want you to see that the impact that you have on Canadian families, that's the work that we do. And we only have 500,000 lives insured. Imagine how many more people we could impact. Imagine how many more if we continue to reach Canadian families. I really believe our opportunity for impact has never been greater. We have a record sales force of over 10,500. We have a proven business model. It's been around for decades now. We have proven products that address real needs, term life insurance, investments. We've got some new products coming I know you're going to be excited about. There'll be a mortgage product announced in the second half of 2019. It's not going to be, well, you can refer it if you're not mortgage broker licensed, but we're going to let you go get mortgage broker licensed if that's what you want to do. Yeah, so we're excited about that. Auto and home, I promise you it is finally coming. We actually have a schedule. So the road shows are going to start. Don't get upset with me. They won't start in the GTA only because Jurix has said, please don't flood us. So we're going to start with some, and we know Primerica is going to flood them. So we're going to start with some of the smaller areas. So we'll be doing Niagara, Hamilton, Burlington, Guelph, and London. And then we're going to do the GTA once they become accustomed to some of the volume. So I know you're excited about that. But honestly, the greatest opportunity we can offer people is this company and the opportunity to change their lives and change their families' lives. I hope that you guys thank you very much for your time.